What the fuck is happening with the entire crypto market right now? Bitcoin, Ethereum, altcoins, everything is kind of up in flames. We're going to talk about that today. Welcome back to the Block Cash Podcast channel. Make sure to check out our Substack for the latest and greatest content, news, information in the crypto space, broader emerging tech space every single week. Blockcash.substack.com. Go check it out. Also, blockcashpodcast.com for all our other resources and for the podcast. All right. I'm going to read through this, give you my thoughts kind of as we go on this one, but Bitcoin has slipped below 68,000. It is sitting currently at around, and I'm going to pull up this chart here in a couple of minutes, 66,000 and still kind of dropping. But it's down lower. The rest of the market's bleeding. ETFs are bleeding 64 million despite about 2 billion going in inflows today. Asian stocks in decline. Maybe that's part of the problem as well. So let's dive into it a little bit more. Asia has had a risk-off day as of yesterday, and that could be part of what's happening to crypto. Bitcoin, the leading cryptocurrency by market value, fell over 2% to 67.9, extending that retreat from its recent 72,000 touching point. Ether, the second largest coin, followed suit, dipping below 35.50 at one point. I believe it's below that today. The broader CoinDesk 20 index fell 1% to 2370. The losses followed 64.9 million in cumulative outflows from the U.S. listed spot Bitcoin exchange trade ETFs. Again, about 2 billion went in today, though. So ETFs haven't really been something that's moved the market at the moment. The first loss since at least the May 23rd, though. Let's see. Inflows have recently been strong, although the market chatter is that they stem from institutions growing interest in the non-directional basis trade rather than outright bullish bets. In traditional markets, Chinese stocks fell over 1%, leading losses in the Asian equity indices and lingering property market concerns. And reports the Bank of Japan, could trim its liquidity boosting bond purchases this week. The dollar index, which gauges the greenback's exchange rate against a basket of major fiat currencies, consolidated on two-day gains, while prices for the supposed safe haven U.S. Treasuries ticked higher, pushing yields lower, and the yield on the benchmark 10-year note fell by 3 basis points to 4.45%. Price of yields are always inversely related to Treasuries, just for noting. Also, we had right-wing parties winning like crazy in Europe in elections over the past couple of days. Snap polls being announced in France, reviving concerns of cohesion of the European Union, adding uncertainty in the market. CPI release for the Fed rate decision has kept investors on the edge. FOMC is on Wednesday, and we'll see the central banks publish quarterly projections, including the interest rate plan and what they want to do. So there's a lot of things happening this week, a lot that's been affecting the market. I'm going to switch over to the chart here just real quickly. All right, there we go. Looking at Bitcoin, we looked at this chart the other week, and this is the funnel that I wanted us to stay in for Bitcoin. So we came down to a heads here, and I wanted to see, were we going to bounce? Because we were here. We were at like 72 almost, and I thought either we were going to come up and test our ceiling on this funnel, or we'd come down and we'd bounce. But we unfortunately came down and then started to drop hard. So what does this mean? Are we completely invalidated? Not yet. Things can change pretty quickly in Bitcoin and in this industry. But something to keep in mind is, we're still way above the 100 moving average and the 200 moving average. Bitcoin is fine. There's nothing wrong with it. We're just back to prices that we saw probably a week ago. But it is frustrating for a lot of people because the rest of the altcoin market has been struggling. And it feels like in the past year, we really haven't been able to substantiate any type of real strides in the market. We're just constantly backtracking to our original prices. And again, why is that happening? That's happening because retail isn't in the market. Again, we have institutional money coming in, and that's great. And that's going to form a new base for this market, primarily in Bitcoin, primarily in Ethereum, maybe Solana, maybe a few other ETF-worthy cryptos out there. But that money is not something that is going to flow into altcoins. Past market cycles are predicated on the idea that money first goes into Bitcoin, it runs up, it splashes over into large caps like Ethereum, maybe Solana, maybe Cardano, stuff like that. And then it filters down to altcoins. Then you have frenzy and speculation. It's not like that this time. It's completely different. Retail is still on the sideline. We don't even know what the Fed wants to do. We have people calling for the Fed to cut rates and the rates cut in Europe, but in the US, it's still up in the air. And things are just too expensive. The dollar's too expensive. Inflation's still high. There's no certainty on whether or not retail wants to speculate. The only thing retail is speculating on is meme coins. And that's because they want to gamble. If they have a very small amount of money, why would they put that in Cardano, Solana, Ethereum, Ripple? They're going to put it in something they think could potentially 100x, 1000x in a very short period of time. They're going to put it into a meme. That's why meme coins have done so well right now, because they're working with retail investors that don't have a lot of capital to put in at the moment and that don't want to spill it over into other things. They want to see if they can hit something big. Retail's hurting still. And that's a large reason why we don't see the support we want to see on these charts. Bitcoin's doing well because of institutions, and it will probably continue to do well because of that. And it's not going to spill over. That money that's going into Bitcoin is going to stay there for a very, very long time. You will see outflows, but not at the same level that you will see the inflows coming in on a consistent basis. And most of that money is going to sit for a long time. It's not something that's going to speculate. It's institutional money. That institutional money will just go back into the institutional bank account if they decided to outflow and pull it out. It's not going to go into your favorite altcoin. That's just the unfortunate reality. We don't have a traditional bull market right now. That's the bad news. All right, we have a different market that's a little bit more unpredictable. We don't know what it's going to shape up to be. And you have economic turmoil and geopolitical problems, and that doesn't help. But at the same time, it opens up the idea to this is going to be a much longer bull cycle than normal because retail isn't in the market yet. Retail is overdue to be in the market, but they can't because the dollar is too expensive. Now, outside the US, you're seeing retail start to participate, which is good. It's just the US market traditionally leads these cycles. So until we see that happen, you're probably not going to see the change in price, the swings you want, substantiated gains. You're not going to see XLM and XRP and HBAR and ETH and ADA and Filecoin and Solana and Tezos and whatever your favorite L2s are, whatever altcoin you like, substantiate itself, because we just don't have that market yet. No one's going to buy it and hold. If anyone buys, they're just hoping it goes up and then they're going to sell real quick because they don't want to lose their money. Look at every altcoin. It's exactly the same right now for that reason, with the exception of Ethereum and Solana, because they have a little bit of a different attraction and appeal. But that's what's happening in the market. It's not something to panic over. It's just something to keep in mind. You have to have patience right now. This is a bull market, but it's different. And so we have to stop thinking about it as everything pours into Bitcoin. Now it's going to go to Ethereum and Solana. And then we're having meme coins and altcoins next. And why hasn't it happened? It's not the reality. That's not the market we have in 2024. And I think this extends greatly into 2025. I think this is just the very, very beginning of this bull market. And it's going to be longer. It's going to be prolonged. And we're going to see some crazy things. And altcoins will do very well. It's just not their time yet. So if you're investing in altcoins, this is not financial advice, but be patient. Don't invest with emotion. Invest in things because you believe in them and because you think the utility can do great things. And have patience. That's how all great investments pay off. Again, this is not advice. This is all educational. But that's just my thoughts on what's happening in the market right now, because I have a lot of people that ask me. And I can't tell them because this is not like other markets. This is different. But I do believe this will be a longer, more extended bull market. So food for thought, whatever you can take away from that, whatever value you can derive. Let me know in the comment section what you think as well about where this market is going and what is happening right now. Also, like the video, subscribe if you haven't already. If you have, thank you so much. And I'll see you guys on the next video that we cover here. So cheers.